Anyway, there's a good rule of thumb. When people are negative, it's a good time to
Buy.
okay. When they are overly positive, it's a good time to
Sell.
That's simple. Do you need to be a nuclear scientist to figure that one out? Now, why do people lose? Why do people don't make it well on the stock market? Because they treat the stocks like if they will be lottery tickets. I have some news for you. Stocks are not lottery tickets. There's a reason behind why the stock goes up and why the stocks go down. If you understand these little mechanics, guess what's going to happen? You will be able to start making capital gains on every single, or well, not every single, but many of your investments. This is basically measured by charts. Okay, I'm gonna give you very quickly a lesson in how you can measure what the stock is going to do. Everything is done by charts. Here, for example, you see a heart. This is a heart rate. It has what? A pattern. It has a pattern. Stocks also have a pattern. If you can understand how stocks behave, you will be able to be pretty accurate in knowing what the stock is going to do. For example, if you want to read what they call candlesticks, candlestick bars, very simple. This is the way it goes. This is the lowest part of the chart. This is where the market opens. This is where the market closed. And this is the highest point during the trading day. Okay? So you have the one-day trading, opening price, closing price, highest price during the day, lowest price during the day. The problem is, if you only see these, you will only see one day. However, if you see many days all together, you will start looking into a completely different way. This is a candlestick. So this is more or less how it will look like. This in market, in investing, it's called a technical analysis. And there's some tools on the internet that will help you do very, very accurate technical analysis. So there are two types of stock investments. First of all, buy and hold, and the other ones are called momentum stocks. Momentum are the ones that you are looking for volatility. You purchase the stock, you stay with the stock for a little while, then what happens afterwards? You sell them. Buy and hold. The problem a lot of people mess up their investments is because it's buy and hold, not buy and keep. Right? They buy the stock, and then what happens? They keep it too long because they do not understand that the pattern has that the stock has a behavioral pattern, has a personality. The stock has a personality. So let's remember I was telling you it's not buy and keep. Good rule of thumb: all stocks are momentum stocks. Not all of them are buy and hold stocks. So let me just give you an example. This is a tool, software, that you can actually buy get for 1 month for free. It's very, very, very good. It's called TC2000, and you can get it at tc2000.com. Very, very useful, very, very nice, and very simple. And you know what is the greatest part? They have tutorials. And if they teach you how to use this software, you will be able to start reading stock charts like a professional. So, for example, this company, this is a very old chart. I mean, I have had this in a very old presentation, so the results are a little bit far, but anyway, are a little bit old, but you will still see the point. For example, the symbol is ALG. That's a company called Angelica Corp. Do I know what they do? I don't really know too much what I do, but you can go to Yahoo Finance, simply type AGL, and guess what? Yahoo Finance will tell you every single thing that you want to find out about the stock. It will give you all the information, it will give you all the hazards, it will give you absolutely you want to do. You can do in a heartbeat, you can do a company for an investment. So for example, if we see here in 2002, we can see that it has a bull pattern or a bullish pattern. It has a bull pattern. Why? Because it's going up, right? You don't have to need to be a nuclear scientist to figure that one out. So let's see, for example, this is a momentum investment example. Let's say that you purchased by July 2004, you bought at 5,100, and you sell in November 2002 at 730. you did an earning per share of 220, approximately 24 return on investment. How many of you would like to make 24% on investment on a 2-month basis? I think all of us, right? And it is not that difficult. It's not that difficult to have. I mean, and as I am saying, when you start generating cash flow, you're going to have excess cash flow that you can play. This is basically playing with excess cash flow. You're not going to be playing. You're not going to be doing the stock market with money that you're going to be needing to feed your children. That's not the way to do it. You do it with extra money. And the moment that you start generating this, whenever you start generating cash flow, guess what's going to happen? You're going to start having that extra cash flow to invest on stocks or also invest on real estate. Okay, now this is another momentum investment example. For example, you bought in December 27 at 7, and then you bought at 10.20, 20 days afterwards. 3.20, approximately 31% return on investment in 20 days. Is that good return or bad return? Good return. And all you need to know is a tiny little bit on how to read the chart. And I'm going to be explaining you how to read the chart in a moment. Very good. For example, Dell computers. Dell computers. One thing that you need to understand, if you want to start trading properly, you have to understand something that is called the trading range. This is the trading range. For example, this over here is the trading range. The trading range goes between 2150 to 31. Can you see the pattern? It never goes above this. So for example, the moment that it reaches here, guess what the stock is going to do? It's going to jump up. So when do you buy? You buy here, you buy around here, and possibly right now, just about here, if it goes up, you can see that for a long time, this is the way it has been behaving. So if you can see that this is more or less the way it has been behaving, what is what you do? When it gets over here, is it time to sell or time to buy? Buy. So if you buy at 23 and then in a couple of months it goes to 31, is that a good investment or bad investment? Good investment, right? And all you needed to do was to understand what the trading range was. Remember, every single stock has a personality. If they keep on behaving the same way, that means that they're going to keep on behaving the same way unless something drastically happens that changes the personality of the stock. You are going to be looking always for support lines. So basically this is the way that the stock behaves. Pretty much this is the way that the stock behaves. If you understand this and you see the pattern, you will be very likely able to make a purchase and very likely be able to make money. For example, let me give you some example in the real world. One stock that I like investing, and I've been investing on this stock for the past 4 or 5 years. Southwest Airlines. The code is LOVE, L-U-V. When do you think I purchased? When do you think the stock is up? Very high up. When are the times that on the holiday season, around Thanksgiving, around Christmas, the stock is very high up. But what do you think happens to the stock around January, February? It goes all the way down. Until when? Until spring break. Okay? So in spring break, I buy, and when do you think I sell? I sell it on high season, which is going to be August. August is going to be a high season, or even I keep it, and then guess what? I purchase when it's going to be Thanksgiving again. So there's several patterns, and the stock has been behaving like that for the past 20 years.